Right, it's time for a corporate interview, and today we're going to be checking in on the health of NBFCs and what we are actually seeing on ground. Joining us is Rajesh Sharma, the Managing Director of Capri Global Capital. Thank you so much for joining us live today on the market. Want to get a sense from you and figure out what's really happening in the financial space with a special focus on NBFCs. We saw a very interesting report out by Citibank earlier this week about how things are turning around the corner. Even if you look at the balance sheets of even banks, it's seeming like the worst is behind us. First up, is that correct?
Thank you. So, if we look at after July onwards, when the normalcy have come back, the credit growth have come back, especially in retail segment, and NBFC are mostly present in this segment. So, I think they are witnessing good growth, and I believe that all the NBFCs are going to report good numbers in the second half because usually September, October to December, and January to March are the good growth numbers for all the NBFC. And keeping that COVID is in control, people are back on the street, in action, in office, everywhere. That is giving a rise in the business activity, and so is the demand for retail loans, including MSME, affordable housing, and personal loans. So I think it is going to be a good quarter, this as well as the coming quarter. We are very confident that it will be good for everyone.
So no Omicron threat towards the end of this calendar year, because usually when we have seen in the past, when there's a new variant or this uncertainty comes in, it does impact recoveries, it impacts growth, it impacts credit offtake.
So Omicron, if we see the reports from Europe and US and WHO, the recovery is of the affected people are within 3 to 5 days. And if this remains so for if it comes to India in a larger number also, we don't feel there will be any pressure on the healthcare system. Hence, it should be within manageable tolerance range. And it should not give rise again to lockdown and cautious approach, except maybe a few affected areas. So far, Omicron, after getting the detailed data analysis, it is not giving that kind of a fear which we got in the COVID-2 wave earlier in Delta wave. So I think we all are watching, but if you look at the United States, UK, where the cases are rising, the recovery of the patients are pretty fast. So I think this should not be as terrible as we had in the Delta wave in April, May, June 2021. So far, we are hopeful, and we hope to have this quarter has gone well. Next quarter also, we are quite optimistic.
Okay, but let's zoom out a little bit, Mr. Sharma, and talk about the next 3 to 5 years. The last time you had spoken to us, you said that you were targeting growth of 22 to 27% over the next 3 to 5 years. And does that hold true? And which pockets are you targeting for that growth? Do you anticipate that you'll do even better than that?
So we are targeting, we remain on our core strategy. We are into MSME with a ticket size of about below 20 lakh rupees, in affordable housing is below 15 lakh rupees. We are currently operating from 100 branches. We intend to increase our branch network to about 225 to 250 next 5 years. Besides that, now co-lending we have signed with the State Bank of India, which is the largest lender of the country, and Union Bank of India. So that will give a quick rise for us to expand, to compete with the other competition with a better range, because this is a collaboration between a low-cost fund and a better collection efficiency and low-cost operation. So I think the collaboration of this, where 80% will be given by the bank and 20% invested by the NBFC, and NBFC will originate and do collection. I think this, once the technology is synchronized and integrated, this is going to throw us a big growth. If you put it this way, if this takes off well, then we do not require any capital per se, and our ability to create a larger number of AUM, the same amount of capital, will give a phenomenal rise in the return on equity. So this is a very exciting development for us. So this can give a much larger growth to us because this is a very unique arrangement, and we are quite hopeful that this will take off in a big time. So in next 6 months, we are working to align our technology and achieve the good numbers. So that growth we have not captured. Barring that, I think 22 to 27% is easily achievable in the kind of space we operate in. And the way the opportunity gap is there in MSME and affordable housing, I think many large players can also chip in to fill that gap. So this is a huge opportunity for every one of us.
Could you give us a snapshot of the asset quality of the book right now? Where's the gross NPAs? What is the SMA2 book looking like?
If we talk overall delinquencies in the range of about 3% of the overall book, and if we talk about SMA2 will also be in the range of about 2 to 2.5% range. And of course, the recent RBI circular which has come, which has given a clarity on the earlier, the way NPAs are classified and collected. This is going to put pressure on everybody because now, as per the new clarification by RBI, all the NBFC have to collect all the area before they can roll back the NPA to the normal. So I think this quarter, we will see that there will be rise in the NPA while the actual number will not rise, but rollback will not be happening the way earlier they used to be accounted. So I think that will give some pressure on all the NBFCs and housing finance companies post this recent RBI circular. Barring that, I don't think there'll be any surprise from us. SMA2 is in the range of about 2.5%, I said.
Going into the new year, what are the ways you're going to try and pick up on the credit offtake that has been going up? What kind of growth can we expect? Basically, what are your New Year resolutions?
So new resolution will be stay on our core or on the stated strategy. We do not want to diversify what we are doing. Our core is continue to lend to those customers who cannot get access to the banking system because they do not have adequate income proof. Continue to focus on the collateralized lending. So these are the two core of our lending, and in that we will add the gold loan in the April quarter. We are already building a team, hiring, building a technology, taking the help of external consulting firms. So gold loan, the product again will meet. So the new year, our resolution will be stay on the core and focus on efficiency, focus on bringing the cost to income ratio down, improve collection efficiency, and try to help those customers who otherwise cannot get the access to the credit and making a social impact. So I think these are the things we'll be continue to remain focusing.